Good morning and welcome to the DecisionPoint Trading Room. My name is Erin Swenlin and I am here with my father, Carl Swenlin. It is July 10th and we have lots to say. I do want to let you know that the Q&A box is how you are going to talk to us. You can send in your symbol requests and questions that way and we'll be able to answer them. The chat room is for you. And I do believe my moderator is in-house currently. He will welcome you to the chat room and you guys can get the conversation going in there amongst yourselves. All right, without much further ado, Dad, I'm going to pass it to you and let's see what's on your mind and what's going on with the market.
Okay, I think a good place to start is technology sector. What we have here is a double top in the technology sector. Now, the second top is not fully executed, but we have a top beneath the top, and we need the price to drop below that to fully start a new downtrend, at least in the short to intermediate term. The Silver Cross Index is overbought and trying to top. And if we keep the negative pressure that we've got so far this morning, we should see that drop down. Golden Cross Index, basically, it's almost to the level it was at the all-time high. So I think we're okay there, but I think we should be looking for a top in the technology sector and therefore a top in the market. Let me move something out of the way here. Okay, now here's one of the reasons I feel like technology will be topping, because good old Apple, I think, you can see it had a very steady advance. And then at the end, when it got, everybody was rooting for it to get to 3 trillion, which it did. It kind of went vertical. Now it's backing off, broke down through that short-term parabolic there. And I don't have a downside target, but I think it's going to take a breather. I've renamed this group. It used to be called FANG. Now I've renamed it to Magnificent Seven. Not original. I heard it on the Business Channel last week. But I think it's appropriate. Here's Amazon. It is also topping. Google has topped over a month ago, and it's on the downside today. Meta is still advancing, getting a little steeper, but still not so much that it has to top, but it's vulnerable with the rest of the tech, I think. Microsoft, another topping formation on head and shoulders there. You see we've got this large cup formation. And I think what we might be seeing is forming the handle for that cup going down in this area at least. Netflix had a parabolic up move and then it's moved sideways through it. It hasn't broken down, but we do have a double top there in the short term. NVIDIA. This is what started that last rally that kind of blew our bearish picture or outlook out of the water. Remember that for months we were hearing how AI is basically going to be the incarnation of the Terminator Skynet from the movies, and nothing but negative about it, negatives, and then suddenly AI is saving the world. And NVIDIA blasts upward. And basically, we still have an potential island reversal sitting here. right now, the bullish outlook on AI is not wrong per se. I just think it's a bit of smoke and mirrors at this point. Nobody knows exactly how this is going to pan out. So there's not any concrete reason for this to happen. But again, it's an emotional market always, and that's what we have right here. And then Tesla, this is the Magnificent 7 plus 1 right at this point. Tesla being the plus 1. Gap up, and it's moving down to fill that gap short term. Notice that the PMO has got a lower top against the higher price top. So that's a negative divergence. Let's see. Okay, yeah, I wanted to take a look at the earnings for first quarter of 2023 was finalized, and we can see that after 3 months of declining earnings, they popped up for the first quarter. This is where it's projected to be by the first quarter of 2024. Okay, back to.
Hey, we did just get a quick question I noticed. So what are the Magnificent Seven?
Okay, let's see, I guess you can see. There's the list: Apple, Amazon, Google, Meta, Microsoft, Netflix, and NVIDIA. That's what I'm carrying as the Magnificent Seven. Okay, let's get to the market. Current market got a short-term double top in SPY. Basically, I think we're going to be treading water until about 2 weeks from now, when the Fed has their next meeting. Certainly, we are again due for a pullback. Bias assessment. Basically, we've still got a strong negative divergence. We have this higher price high, and the Silver Cross Index is at a lower top. Golden Cross hasn't topped yet, and that takes a little longer. But right now, for the Silver Cross, our potential is to go to 65. It's already at 67. So there's really not any potential upside right now for the Silver Cross Index. And the Golden Cross Index, 200 EMA is at 63. And okay, so there's a potential upside of about 9 points for the Golden Cross Index. I'm not saying that's where it's going, but there's the potential out there, at least for that. Okay, I want to look at our two primary long-term and short-term indicators. The short-term Swenlin trading oscillator is short-term. Here's for breadth and then for volume. It topped out last week. Our intermediate term indicators, ITBM, intermediate term breadth momentum, and IT volume momentum. I noticed there's a negative divergence on the volume. Both of those have topped out, and I'd say they are simpatico right now. So the short term's heading down, intermediate term's heading down, with a potential for down around this area here, possibly. Okay, the US dollar is basically in a downtrend. We've got currently sideways movement. This is a 1-year chart, and this is a rising wedge, very gradual, no telling when it might break down. Gold is also in a downtrend from this all-time high here. And they have the rounded top, which forecasts lower prices. Now, this may be as low as it goes. I don't know. Right now, we've got a shorter term rounded bottom here, saucer formation. And that may be the end of the decline, but we shall see. Commodities are not doing well. And USO is another one that's stuck in this area. Something's got to happen to break these things out. Right now, it's just drifting sideways. Bonds, they're drifting sideways. And but here's Erin and I were talking about this weekend. Bonds have broken a 40-year rising trend line, and they're headed lower. It may be not as, might not take 40 years to get back down to this level, because down is usually faster. But anyway, we've got the yield, a breakout, which implies higher yields and lower bond prices. Yields right now, we've got this 1-year chart showing from the 1 month to the 30-year, and it's inverted. The highest yields right now, the highest right now is the 3-month bill and the 1-year note. Energy is coming back. Right now we've got, let's just update that chart. Yes, the 50 is still above the 20. So we're looking for an upside crossover of the 50 and the 200. Let's say that is, yeah, that's what immediately we're looking for, a crossover of the 50 above the 200. And shortly after that, we would get 20 over the 50. This is a sideways pattern, and it's hard to draw any conclusions when you've got this kind of threading. Okay, we've covered that and that and that. Is there anything else I should?
Let's see. Bitcoin, the 10-year yield.
Bitcoin. Let's do that. Bitcoin, yeah, that's another thing. Let's go to the longer term chart. I was expecting this bounce to pretty much end about this level, but we've got Larry Fink from BlackRock talking about a new ETF for Bitcoin, for cryptos, and so there's smoke and mirrors interest in in the cryptos again. So that we might be seeing this rising trend continue, but it has been stalled right at this level this far. And the other thing you mentioned?
Oh, the 10-year treasury yield.
It's in a rising trend off of this low, and has hit resistance, bounced 3 times, 3 days in a row, trying to get above this level. But it's in a rising trend.
Yeah, the PMO still looks pretty healthy.
Yes. Any other questions? I don't see any.
Yeah, questions. I guess Warren Buffett says to buy and hold the SPY.
He and I don't think along the same levels. Not that he's wrong. Obviously, he's right a lot. So, but I'm just saying, I'm looking for a pullback on SPY. So that's my
right.
my comment there.
Yeah, and whether it turns into a correction or not, we'll have to see. But certainly we're vulnerable now to that correction, especially when I look at our Silver Cross and Golden Cross indexes.
Right. Absolutely.
All right. Let me go ahead and share my screen. We're going to go ahead and take a walk. We looked at some of the sectors already, so I'll try not to get too involved in the ones we've talked about, but I did want to give us a good review of what's going on currently within the sectors. And, the main thing that I would say is a lot of these PMOs are decelerating, and that is not a good sign for the market. And we have to be really careful with that. As far as where there looks like there is strength, energy, of course, as soon as I got really bearish on energy did decide it wants to turn back up, which is what we were looking at on the energy chart before. And I will go into that energy chart just a little bit more, because right now I'm looking at this and I see a flat top and rising bottoms, and that is a bullish ascending triangle. So there is a chance here for a breakout there, and something we might want to look more closely at. I'm also noticing with industrials having a really good day today, that PMO, which had started to turn over, it does look like it's getting ready to bottom above that signal line. So industrials are starting to look pretty interesting. Healthcare and utilities, technology right now, those are starting to look really weak, particularly healthcare, which has dropped below that 200-day EMA and now has a new crossover sell signal on the PMO. Big problem there. Technology, as you said, you can see a double top is building here, and the PMO has already been in decline. Now, I think the good news is that the PMO has been declining for quite a while, and we haven't seen a huge breakdown in price yet. So that does give us a little bit to hang on to as far as technology. Let's go ahead and dive into
Erin,
These. Yes.
On that technology, yes, that's a short-term double top on that chart, but the one I pointed out is like a year and a half double top, and that's major if it breaks down.
Absolutely, it is. All right, let's go ahead and look at some of these sectors in more detail here before we get into symbol requests. Right now, you can see that, comm service is still clicking. And when we looked at that meta chart, you could certainly see the rising trend is still intact. Meta is pretty much the comm services sector. So looking at this chart and looking at Microsoft should be very similar. As far as participation goes under the surface, certainly we got a bit of a pullback out of overbought conditions, which is very good news. And you can see on Friday, we did get a pause in that decline on those participation readings. But stochastics falling right now. I still think that with this top beneath the signal line, we really are vulnerable to a decline and a drop below that rising trend for comm services. Consumer discretionary, again, still in a rising trend, but look at this. We now have a new PMO sell signal coming in, and participation also pared back on consumer discretionary. It's still at healthy numbers, still above 50%, but certainly cracks in the foundation here. Notice also that stochastics are falling. It's certainly been an area of relative strength compared to the SPY, as you can see the rising trend. But right now we have to be careful, again, in consumer discretionary. Really, it seems we need to be careful across the board. Consumer staples, not really breaking down, still holding a short-term and an intermediate-term rising trend, but we do have a PMO that's topped almost below the zero line, showing some weakness here in momentum. And you can see that the participation numbers well below 50%. So we need to see some action in this sector to start getting that participation up. But really what this looks like is a sector in decline. Stochastics are in agreement with that. XLE, we did look at XLE. I was really feeling quite bearish about XLE, and it was literally the very next day that participation bottomed and we got it shooting back up. Crude oil has been going up, and that's certainly helping. But it's also, crude oil is against overhead resistance, and so is energy here, you can see. But we do have the flat top, rising bottom. So really the expectation here should be a breakout for energy. And certainly we have readings that could support a breakout here. Stochastics turning up in positive territory. So energy actually looking like an interesting place to be. We got very bearish on it. And like I said, it was incredible. The very next day, it was a huge rally and participation just shot right up through the ceiling. Financials is where I'd like to be because that's where we have a lot of beat down stocks that were really taken down with the whole bank problem, and they weren't banks. So there are certainly financials out there that are going to be good to look at. I like this bounce off of this short-term support line, and the PMO is starting to accelerate. So financials looking kind of interesting right now, above 50% on the participation readings of stocks above their 20 and 50-day EMAs. Just now got a 50% reading on the percent of stocks above their 200-day EMA. So really a nice setup here for financials. Also notice that relative strength picking up. So financials looking like a very interesting area of the market right now. Don't need to spend a lot of time on healthcare, certainly in decline, PMO sell signal, lost support at the 200-day EMA, stochastics falling, certainly not the area to be looking in just yet. Industrials, like I said, looking very healthy. Another area of the market, financials and industrials, you're seeing that bottom above the signal line for the PMO and very strong participation readings. The only issue I can see here is that, we do have a very overbought Silver Cross index, and really there's nowhere for it to go but down very soon. So particularly if we get these participation readings right now, we have fewer above their 20-day EMA, and that could certainly make us lose a few of these silver crosses that we have currently. But still, industrials and financials, I would say, looking the best. Materials, really kind of wishy-washy here. And the PMO is showing that it's on its way down to a crossover sell signal. And participation did tick up on Friday, so that's not too bad. And stochastics do look like they're decelerating here. But I would say financials and industrials look more healthy than the materials sector right now. And real estate, this was an area that I was really liking on Friday, but we are seeing a little bit of thinning in participation. It's at least taking it out of those overbought readings. Stochastics now moving just a little bit below 80, but you can see relative strength still good for real estate. I think there's still some upside potential here, but we do need to be aware that these participation readings are starting to shrink just a little bit. And finally, let's see, technology, short-term double top. We talked about the longer-term double top setting up here. This is a problem, though, for me. This is an Adam and Eve double top for sure. You've got the PMO on a sell signal moving further down. You've got such a strong Silver Cross index and a Golden Cross index that is very strong. But honestly, they're in overbought territory, and technology really does look primed for a decline. Finally, we look at utilities, and another place not too exciting to be in the market. We also have a double top here below the 200-day EMA, PMO topping, very low participation readings. Again, not the place I would be looking to throw my fishing line. All right, so really we want to concentrate on financials and on industrials right now. Let me get this out of the way. So we'll go down to our industry summary so we can dive in and get a little closer look at what's going on within those sectors. A lot of times when I go in and I start looking at the industry groups, maybe there's one or two that look good, but maybe not so many others. So that can tell you where to concentrate or just to know which one is truly internally the strongest. Asset managers looking pretty good, but the PMO is topping. Banks trying to make their way up. PMO is at least on a buy signal, but stochastics topping, it is in a rising trend. Rising trend for financial administration. This one looks very strong, getting ready to come and test that 200-day EMA. Insurance brokers, not so great, a little bit of toppy here. Full line insurance still in a nice rising trend channel. PMO rising, like the look of that. Life insurance, nice breakout above the 200-day EMA. So this might be a good place to start looking for some stocks within life insurance. Property and casualty, well, kind of stuck around those key moving averages, not really giving us a breakout. Reinsurance breaking out to new highs. PMO is on a buy signal. Stochastics topping a little bit. I think I like life insurance the best so far. Mortgage finance looking okay. PMO flat though. Stochastics turning up in positive territory, but that flat PMO and not getting above this overhead resistance makes this a little bit less exciting. Investment services, not so much. PMO topping. Consumer finance. Flag formation looking pretty good at new highs, and that PMO does look like it is starting to accelerate higher. So consumer finance looking interesting in financials. And here we have flat top, rising bottoms, ascending triangle on specialty finance. Stochastics did pause, so they're not in decline anymore, but that PMO still looks really vulnerable to a crossover sell signal. So I'd want to see a breakout here for sure. So I would say really going through these, life insurance has the best setup on its chart. So checking out life insurance stocks might be a good idea. If we just go really quickly in here, we can organize by the stock chart's technical rank, get a feel for which ones might be breaking out and where we want to concentrate. A lot of nice moves here. Primerica looks good on a nice rising trend. PMO rising, really pretty much traveling in line with its industry group, which is now starting to pick up strength. So not a bad one there in Primerica. Citizens looking interesting here, getting close to overhead resistance. That does look like a very low volume stock though. Let's go over to Unum Group. This one looks great, breaking out to new highs, pulling back a bit today, but that could offer a really good entry. Stochastics above 80 and performing quite well against the industry group itself. All right, so that really gets us into the next one, which is industrials. We'll go through a little bit there, see if we can't find a stock or two in there. Delivery services, looking all right. Airlines, really, really overbought. It really would have liked to have gotten involved in airlines on this flag formation. Broke out above and made some new highs, still continuing upward. But, I think most of the move might be made in airlines. I'm not so sure we're going to get much more out of it. Aerospace hitting overhead resistance, PMO topping. Building materials, nice little pop from what could be a flag formation, but PMO topping. Defense stuck beneath the 200-day EMA. Nice move on industrial suppliers. We do see that the PMO is turning up above its signal line, which is a nice PMO surge. Industrial machinery, not so much because the PMO. Looking okay here for commercial vehicles with that PMO turning up above the signal line. Gotta like that. Heavy construction, nice breakout. PMO needs to stay above its signal line, but I like that breakout. Diversified industrials, not seeing too much in here that's exciting me on industrials. Flag formation possibly on waste and disposal. I'd have to say the financials are looking a little bit more healthy here than the industrials, but we can't sneeze at what's going on in industrials themselves as a sector. But I have to say that when we dive in and look at these more closely, that I have to say financials are looking very interesting right now. All right, that leaves us with about half an hour for some symbol requests. I will have time to show you some of the trading that you can do using our 5-minute candlestick chart. So this should be a really interesting exercise for us. Let's get started.
Okay, we've got a question here.
Yes.
will rebalancing NASDAQ affect big cap stocks?
All right. Let me see.
Technology, big cap technology. I
Ah,
don't know what you're referring to as far as rebalancing the NASDAQ. When you have an ETF like the S&P 500 equal weight, they do rebalancing on that quarterly. And in that respect, the big tech stocks will have less effect on that particular ETF on the prices. But I know that certainly the big techs are really excessively weighted at that. And they rebalance every quarter. So in the last quarter, they've been really expanded. So, but I don't know what exactly what you're referring to here.
I think, yeah, I mean, I think that what's going to affect the big cap tech right now is just the fact that everything's starting to pull back, and it's, certainly affecting the NASDAQ as it is the rest of the market, with the Magnificent Seven starting to show some cracks in the foundation for sure.
Yeah.
All right,
Another
let's go
question.
ahead.
Someone says that markets now look like 1999. What do you see? I remember that Jeff Sika said this on Varney this morning. I was on my back doing back stretching exercises. I don't recall exactly what his reference was there, but other than not making any big broad forecast, I'm just saying right now I think we're getting ready for pullback. I think that's what we're looking at right now.
All right, let's hop into those symbol requests. Yeah, I have to say, I mean, really my concern at this point with the SPY is, we are in pullback mode. I think there's no doubt we're getting ready to pull back even further. My concern at this point is, will it be a correction? How far down are we going to go? And with both the short-term and intermediate-term indicators, I can just pull that chart up really quick. But the fact that both of them are declining like they are, that really does not bode well. We need the broader markets to participate here because, if you look at our bias chart, clearly we had 90s back here in late January, February, and even back here at those August tops. But look at the readings that we had. We were in the 90s on these tops, and we're only in the 60s currently. So that tells me that those big mega cap stocks are continuing to lead the market while the broader market is starting to catch up. And that's why we're getting that Silver Cross Index moving. There's still a lot of portions of the market that aren't participating in this rally. And now we're getting the pullback. And I don't know that the broad market is going to be able to support this rally if those big mega caps start to turn.
A correction, we're up in the 80s, just about the 80 in those two spots.
All right.
Okay, you want to try IMGN?
Let's try it. Let's see what's going on. Certainly a huge breakout here in May, which basically turned everything that happened before it into a straight line. We're not seeing much there. So we'll just concentrate on this right side of the chart. But you can see PMO is in decline with price. It is sitting here now on that 20-day EMA. I think part of my issue with this one just out of the gate is that it is in healthcare. And biotechs, while they're performing in line with the S&P, there's still so much weakness in that healthcare sector that I would be very careful with your healthcare positions right now. This hasn't broken down. We're seeing that PMO is unwound out of those really overbought conditions. So things are getting prepped for a nice little bounce here off the 20-day EMA. But the broad markets, if we're going to start seeing that pullback continue, This is going to make this one particularly vulnerable at the 20-day because we do have that healthcare sector that's not performing so well. But let's just say we are going to get this bounce off the 20-day EMA, and we might want to be involved in it. For me, of course, most of you know, I don't get involved in a stock that has a PMO that is pointed lower. So that is a problem for me, but let's just go in and look at a 5-minute candlestick. On the 5-minute candlestick, we like to find a PMO crossover buy signal like we have here with a positive RSI. That's what we're shooting for. And you can see that that's exactly what we've gotten. So if this is something you wanted, we do see the PMO getting ready to turn right back down here. So you might be able to get a nice buy point at these lows. Probably want to wait this one out just another couple minutes, but knowing that the prior buy point was in this area, I think it wouldn't be a terrible thing if you were to get involved in it now. I did have a question in email about what do you do when you've got a winner and you want to get involved in it and the 5-minute candlestick is just not cooperating. What I usually will do is I go back and look at some prior buy points. Where did it signal that I should get in? And if I get anywhere near that, that will be great. But if you're in a winner that keeps on winning and you're kind of stuck because your PMO is just continuing upward and you just have to make that decision one way or the other, if the PMO is rising and you got a positive RSI, you're likely getting in at a good point. So if that is occurring when you get to your chart, if it just is not, you don't have time to wait for it to change, go and look at those prior buy points, look at where you might have wanted to get in. In this case, you can see the prior buy points down here, but I would be fine if it got back down to this 1845 level as an entry.
You know, that's a biotech stock. You want to take a look at the industry group?
Yeah, I think that's an excellent idea. So we know that healthcare is really suffering, but what the heck is going on with biotechs? Well, biotechs, participation-wise, are certainly oversold, so that's a good sign. Stochastics are turning up in oversold territory. PMO is kind of flat here, though. We're in a big trading range for biotechs, and biotechs tend to be a pretty lucrative area of the market, and we like to get involved in them because when they move up, they usually move up very quickly. But right now, we're in this trading range. We're getting the bounce right now, though, Dad. I have to say, I mean, it doesn't look terrible to me at this point. We just need to see more participation under the surface. That silver cross index is still in decline. And the golden cross is starting to settle in at 35%, but that's still, both of these are still below our bullish thresholds. I would really be interested in seeing what's going to happen with this rally if we end up with a little double bottom. I mean, that looks like that's coming together.
Kind of flat.
Kind of flat. Not a real exciting industry group to look at here.
QRVO.
All right. Okay, this is a semiconductor. Since we're talking the semis, why don't we look at the semiconductor group first? And I promised to go back to QRVO, but we happen to have the golden and silver cross for semiconductors. Just like technology, the big problem here is very overbought readings. I mean, we have a 92% reading on our golden cross index. That is very overbought territory. We should be looking for a decline here. Look at what's happened to participation of stocks above their 20-day moving average. That is a huge, huge hit. Be down to 36% above their 20. This number, the Silver Cross Index, is going to start falling. If big tech's going to start failing like we think it will, this is going to be one of the first places that it's going to fail, and that's in the semiconductors. So let's get back to QRVO. And we know that right now, let me get that back in there so it'll go to where I want. So with technology looking weak, with semiconductors overbought and weakening, I'm not so sure this is where I'd want to be. I'm thinking that this might be a great area to profit take. You're at the top of some overhead resistance here coming in. PMO did turn up, so I'm not going to say that's bad. And obviously the OBV's got a little bit of a positive divergence going on. So this might be an exception to the rule of semiconductors. Stochastics moving above 50. I don't think I'd trust this though, knowing the backdrop with semiconductors starting to show that short-term weakness. I'd be really careful with this one, but a positive OBV divergence does suggest we're going to get a breakout here.
No, actually, that's a reverse divergence. Really, you've got
really. I mean, we've got rising
higher OBV, but it's not pushing prices up.
Sure. So while we have rising bottoms and declining bottoms, there is the problem that when we were, at these, we haven't gotten to the prior highs where we above those. So that would be more of a reverse divergence.
How about a weekly?
Let's look at the weekly. Doesn't look that bad. I mean, as far as semiconductors go, the thing is we know that the semiconductors, that a lot of them have really moved higher. This one has not really seen the same kind of action that, say, an NVIDIA has seen. So this one already is kind of starting off at a disadvantage. So while the PMO is turning up, certainly I could see holding this one, but it might be time to take a few profits here with technology starting to turn over, and particularly with semiconductors themselves starting to turn over. We haven't talked about sell points, so I'm going to look at the 5-minute candlestick for sell points. A sell point is basically when that 5-minute PMO turns over on the 5-minute candlestick. I don't need to wait for a sell signal. If we end up moving into negative territory on the RSI before we get a PMO that's topping, doesn't happen often, but if that happens, that's enough for me to sell. Basically, I'm just looking for an excuse to sell when I get to this chart. So if I came to this chart, I would realize I'd missed the best sell point, but still we're at a sell point with that PMO still in decline. RSI holding positive here. I wouldn't be looking at this as a buy at this point. It doesn't look that bad, but we know there's too much background information here. The backdrop is really not working in Corvo's favor right now.
Jets.
All right, we did look at airlines, and they are looking like a winner that's going to keep on winning here, but the PMO is very overbought. I think airlines still might have some more upside for them, but the unfortunate part is we've missed most of that rally. So they are very overbought. I mean, look at that RSI. Typically, you can hold overbought conditions like we did here, but once you get overbought, the next level is usually to move downward. So I like airlines. They are moving higher, but I think it's a little late to get involved in them. Certainly hold. I don't see any reason why I wouldn't hold this.
IJR.
Small caps really started to show some strength last week. And that was very interesting to me, because when we looked at that Silver Cross Index for the SPY, like I said, it's in the high 60s. And it told me that the broad market was starting to participate, but we needed more participation. IJR is starting to make a move upward, and that 50-day EMA getting ready to cross above the 200-day EMA. I just think those headwinds of a pullback, possible correction. I know we keep talking about this now, and I hate being so bearish, but there are a lot of things out there that are telling us that this pullback might become a little bit more. You're getting ready to hit this overhead resistance for IJR. I think, looking at the overbought PMO, I would be really careful here. Small caps are going to likely follow the large caps downward. It's really all hinging now on those mega caps and those tech stocks. And we're seeing the decline there. I hadn't seen that semiconductor chart in a while, and seeing that Silver Cross Index so high and seeing the participation of stocks above their 20-day EMA slashed. It just tells me that this is not where I want to be in this market. And I will be definitely reevaluating my positions moving into this downtrend. But I was really starting to get kind of bullish here on the market because we didn't have overbought conditions on that Silver Cross Index. But now we're starting to see some pullback here in those major, like I said, in those big techs. And that's going to pose a problem here. But still flat tops, rising bottoms. PMO has turned back up. I think you could hold here. But again, I think that the winds are going to start working against the small caps and mid caps. And we're going to start to see them fall as well. It'll be interesting to see what happens at overhead resistance. Definitely would want to see a breakout there if I wanted to continue to hold IJR.
BKNG.
DraftKings making another big move to the upside. This is a prior diamond in the rough from our DP Diamonds report. PMO on a crossover buy signal. We know consumer discretionary still has some very good participation. I like the outperformance going on here for DraftKings. Big move over 6%. Might be a little difficult to get in. Let's see what we've got here. All right, more than likely, this is going to be around our best buy point today. The PMO had a sell signal. It's moving downward, but we're seeing no breakdown in price at this point. So I would expect that the PMO is going to eventually turn up here, and we're just going to be making more highs for the day. So I think that at this point, you could wait it out since the PMO is still in decline, but I have a feeling that you're not going to get a much better buy point on DraftKings today.
Caterpillar.
All right. Okay, flat tops, rising bottoms here. Another look at an ascending, bullish ascending triangle. Looks like it's getting ready to test that overhead resistance. PMO, I would be worried about really because it had flattened out, but we're getting a surge above the signal line and stochastics have turned up, and look at the outperformance going on here. Commercial vehicles, that was an area in industrials that I did like. So I'm liking the way Caterpillar looks here. If we go to the 5-minute, buy point appears to be coming in. RSI is positive. We don't have the crossover on that 5-minute PMO, but it has flattened. And if you look in that thumbnail, you can see that it is rising again. So I would say this is probably an aggressive buy point right now. Conservative buy point, of course, being if we get that 5-minute PMO to give us a crossover.
Okay, I have a comment here about the NASDAQ rebalance comment.
Oh, okay.
Apparently the NASDAQ has announced a special rebalance. I haven't read anything about that, but so I can't comment on that. It sounds a bit strange, and I'm not doubting the comments here, but I'm just saying I can't figure out what that is, and I'll just have to look it up later on today.
All right.
And LUGDF. Okay. I'm sorry, that's LUN.TO.
All right. Metal mines. So miners, this is just a miner, not a gold miner. Metal mines, I'm not sure if that's considered miners or if it's, it must be. Nice little turn here. Gold miners are really set up for a reversal here, but the problem is we don't have the participation to support a reversal just yet. Flat tops, mostly rising bottoms again. So it does favor a breakout coming up, PMO on a buy signal, stochastics rising. I mean, this looks like the kind of stock I would want to get involved in.
Okay.
5-minute candle. PMO is turning up, so this looks like a pretty good buy point. Looks like we're going to get a breakout here coming in. So this would be an aggressive buy point. Again, the conservative buy point waiting for the crossover on that PMO, because certainly we can see it will fail at times, and that would have gotten you involved at kind of the wrong time. But if we'd waited for the crossover here, that would have gotten you in back here. So that's a better buy point. But this is an aggressive buy point. Doesn't look too bad.
Okay, another comment. The rebalance for the NASDAQ is supposedly going to take place July 24th. We shall see. Again, I will look that up later today.
Yeah, we'll have to see what how that affects it. But, when we look at the golden and silver cross, might as well switch over there. We look at it for the, let's go to be here. Look at the NASDAQ. We already know just participation wise in breadth, this is not taking into account cap weighting when we look at a silver cross or a golden cross. And the silver cross is starting to decline. Golden cross looks pretty good on the rise, but looking at the participation under the surface here, it's not going to have an opportunity to rise much more than 37%. That's, maybe 2 percentage points here from 35. So we know, regardless of the rebalance, there's still problems under the surface. It's not going to, these aren't cap weighted, and it's already showing weakness. So I don't know. I mean, the rebalance is probably interesting and might have some effect on the price movement itself, but the participation isn't going to change.
Okay, there's a question. If the financials are good, are the markets good? That's the way I interpret that.
Yes.
You want to look at financials just
yeah, we'll pop back into financials here.
I don't think that's, broadly speaking, I don't think that's necessarily the case. I'd say if the financials are good, there's probably a good chance that the rest of the market's going to be okay too. But what do we look at here?
So on financials, like I said, I mean, I like the look of it. Part of the thing with financials, in my opinion, is, they were beat down so far and so hard. And there are those, stocks on, discount prices there. And I think that people are still interested in, if they're going to get in, they want to get into something with a nice reversal, some upside potential. And that could be pushing some of these financial stocks higher. And that could certainly affect the market. We want the financial sector to do well, but certainly we've seen the S&P fall and certain sectors do well in spite of that. So that could be the case here. We might find financials doing well in spite of the fact that the rest of the market kind of shows weakness and moves down.
Okay, is BR a buy?
Well, let's see. This is in industrial business support services, which I do recall not looking too bad. PMO looks like it's surging above the signal line. I can't really tell if it's rising just yet, but nice rising trend staying here and pull back. And now it looks like it's getting ready to make a move to the higher, certainly outperforming the S&P. Stochastics turning up. I could see this one as a buy. The PMO is just a little concerning because it is near-term overbought. You can see right here, this is kind of that level where it fails. RSI is not quite overbought yet. Previously, when we get overbought on this one, let me get a crosshairs going on here. So you can see RSI got overbought, decline. RSI got overbought, decline. We're overbought again. We were overbought here and decline. This looks like a little pop. We're going to probably see a little bit more rally, but I would guess we're going to be in for another little decline. So we're going to just do this sort of back and forth, but melting up at the same time. So I do like the stock. And whether it's a buy right now, you are on the crossover buy and you do have the positive RSI. So anywhere in here could be considered a buy point. And it's really not any different really from where we were earlier to where we are now. So I'd say it's at a buy point right now if this is something that you're interested in.
ExxonMobil.
Looks a lot like crude oil, doesn't it? Sideways movement. Yeah, it makes sense, right?
Right.
Sideways. Oh.
Yeah,
sideways.
unless unless we get people not meddling in the energy area, it's going to be depressed until that ends.
Mhm.
So I'd be
And-
looking for something like that to happen. But
And yeah, at this point, we're just not seeing it. Very mostly sideways movement. PMO turning up on today's big rally. I just see more trading range for XOM. I don't know that this is a necessarily a sell at this point. I think you are going to look for a move probably up again to test the overhead resistance here. I mean, energy as a sector, things are improving, so it does look a little bit better that way.
LTHM.
Okay. Lithium. Okay. Lithium looking pretty good, honestly. A nice rising trend going on, positive RSI, stochastics positive turning up. Relative strength, it's been in line with the market. We do want to start seeing it outperform the market just because the market's looking a little weak right now. But I'd say lithium looking pretty good here. Again, let me get the...
Are you sure that name? It's L. Looks like.
Oh, Livent. Yes. Thank you. Livent. Specialty chemicals, not quite the same as lithium there.
Okay.
I do like it. It's getting ready to break out once again. Looks like it's breaking out again. PMO flat, really not telling us a whole lot here, but that's a function of the fact that acceleration has really been so steady through this rising trend. And it does look like the rising trend is going to continue.
Okay. IWM, I think that's
that'll be our last one. All right, Livent, just a real quick peek, not at a buy point. I think you're going to get a better one given this declining trend. Keep an eye on that for your buy point. IWM, we did look at IJR. Like I said, small caps last week on Friday in particular, nice bounce off this key moving average. PMO has turned up on the big move to the upside. Stochastics turning up, RSI positive. I mean, I think it looks good, but again, we know the silver cross index for small caps, and we're just going to look at that chart one more time here. The silver cross for small caps is topped, and it's just above the 58%, and it's going to probably continue lower because you can see that the participation is not really there. So I think it's a little early here to get on board with small caps, particularly given the large caps are looking weak right now.
Okay, we have a minute to go.
All right. Well, we were going to be on Making Money with Charles Payne today, but that unfortunately did get canceled. So we will have to keep you informed. Keeps getting shuffled around, but eventually we're going to get there, I am sure. So we'll keep you informed of that. Do come check out our website at DecisionPoint.com. If you are interested in trying us out for 2 weeks, just use the coupon code DP trial with the number 2. Give you 2 free weeks of the reports, and you can see how much that they can help you with your trading. All right, with that, I'm going to wish you good luck and good trading.